It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, December 10th, 2015. Cruising our way through this second week of the 12th month of the year 2015. Got another jam-packed newsletter in store for you. Tons of volatility right now. Just a heads up, this is my last newsletter of the year 2015. The next nightly newsletter will be on Monday, January 4th. I know. Holiday season comes up. I'll be taking next week to finish up all the work with our students here at School of Trade, and then we are off for the holiday season. I wish everybody a fantastic Merry Christmas, a Happy Hanukkah, a Festivus for the rest of us, and of course, whatever other holidays out there we're celebrating this year, and a very Happy New Year. 2015 has been an incredible one. We'll do a little bit of a wrap-up at the end of tonight's video. But again, last newsletter of the year 2015. Next one will be January 4th, 2016. I can't believe we're even talking about that right now. We got rollover to the March 2016 contract coming up. Jam-packed newsletter. We'll talk more about that as we go. Tonight's newsletter, though, let's finish that first. Crude oil is bearish. We get a spike in channel this evening, which tells us the best opportunities will be selling the highs of that channel using buyer failures. The E-mini S&P is nearing the tail end of a bear flag, which lasted all day today, and it started at the end of yesterday's session. Now we have 3 legs higher from today's session and a double overshoot of the highs. This market looks very, very heavy, but we got a plan for tomorrow. We're going to get something tomorrow in the S&P. You can definitely feel it. I got a plan for the E-mini. Gold, the yellow metal, is bearish on its way to completing the flag that started at the end of yesterday's session. We have a new, pretty pathetic channel forming today on gold, which gives us a clear plan for tomorrow. The ugly chart of the evening goes to gold. We'll take a look at that in a second. Right? It should get a medal for it so ugly today. And on the euro, the 6E is bearish after collapsing off yesterday's highs. We told you guys about those 3 legs up on the euro. It sounded like everybody listened to me. So we collapsed off the highs. Now we go into a bearish spike in channel, which gives us plenty of opportunities in both directions for you Euro traders tomorrow. As you can see, we get a plan for crude, S&P, gold, euro. Before we jump into our charts and put together our strategies for a Friday trading session, I want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of the video. Make sure you follow that link and come over and join me here on our blog. First of all, upper left-hand corner, if you're not a member of School of Trade, I got a free pass for you. I'd love to share with you more of the experience of being part of our trade room. Grab your free pass in the upper left-hand corner. In the lower right-hand corner, right above my ugly mug, you'll see a spot to register for our newsletter mailing list. That's right. Now you'll never have to worry about missing another newsletter ever again. All I need is 3 things: your name, a real email address, and then check your inbox. I'm going to send you a verification email. Right below the video tonight, you can download all the charts. I frequently get questions about what chart time frames am I using. You can, of course, grab all the charts right below the video each evening. And then, of course, over on the right-hand side, you can join our trial membership. You can learn more about our 3 levels of membership: beginner, intermediate, and advanced. And don't forget, we usually have someone there 24/7, 365. Apparently, we got to restart the chat server. We'll get that done for us as soon as possible. All right, ready to rock and roll? I think we have all the plan for tomorrow here, or now you know the deal for tonight. Let's take a look at tomorrow's news. Friday, December 11th. Tomorrow, of course, being a Friday, that means early in, early out. Don't be trying to force trades after noon on a Friday. My Friday trading plan is always very simple. Get into trades early. You're more than welcome to leave trades open in the afternoon, but be very, very careful getting into new positions after 11:30 a.m. Eastern Standard Time. As you can see, we got some pretty good news. Tomorrow morning, 8:30, we got retail sales, always a very highly anticipated report, the retail sales report tomorrow. So 8:30 and 10 o'clock tomorrow. If that doesn't get things moving for us tomorrow, well, I don't know what will. Just be careful trading afternoon session tomorrow. Take your money and run. That's what I always recommend, right, for all the Friday trading sessions. Let's kickstart this final newsletter of 2015. I can't believe my last one of the year. What an incredible year this has been. Record-breaking year in this office. It's been one of the best years we've ever had. On crude oil, bearish with a spike in channel this evening, which tells us the best opportunities will be selling the highs of the channel using buyer failures. The collapse off yesterday's high turned into a bearish spike in channel, which explains the slow moving market today as it kind of grinded lower. This tells us to be patient for price to pop higher and then look for buyers to fail on the pullback and sell it back down again. We got a couple of these spike in channels tonight. Let's talk about it. In regards to a spike in channel, we talked about a flag yesterday, right? This is going to be the kind of the paternal twin sister, or something like that, right? This is not exactly the same as a flag. It's much easier, to be honest with you. A spike in channel starts with the first component is a spike down. The second component is a lazy channel. And I describe it as a lazy channel because that's what it feels like. It feels very grindy. It doesn't feel very convicted. And that's one of the telltale signs you have a spike in channel, right? It starts off with a spike. Usually the spike is coming off of some sort of news. Yesterday's news on crude oil was the inventory report, right? And then it leads into this channel down. And we do a lot of work with spiking channels here at School of Trade because in my opinion, it's one of the most useful kind of alternate patterns that you can use. It's a great way of making sense of what's happening when nothing else works. And we love using spiking channels because ultimately they give you two very specific opportunities here. First of all, the best way to trade a spiking channel if you are a bear, if you're a seller, is going to be to sell the high of that channel. Okay, that'll be one way to sell it as a seller, right? Now, the best trade you can have, though, on a spiking channel is going to come after the correction. And that's going to be one of the most important parts of a spiking channel. It's going to make a run for this area right here between the swing high and the top of that channel. So this becomes a really important area of resistance. And basically, this type of pattern, what will happen is it will jump higher, and it doesn't have to go as high as this, but it will oftentimes go all the way up to the base of that channel. Then here's what happens. The buyers confuse this for a bullish market. And the reason for that is because as it's going lower, it's so slow. Again, remember I called it a lazy channel? Remember, the laziness is what confirms the spike in channel. It's also what confirms to the buyers that this must be ready to reverse, right? So the moving average comes down, and what happens is the buyers try to buy that next pullback to the moving average. They fail, and that's where the juice comes in. That's the best trade you're going to get on a spike in channel. It's selling into buyer failure. The lazy channel confuses buyers. It pops up, tries to hold the pullback, and fails back down. Now, I told you there's two opportunities, both the bears and the bulls. Where do you think the bulls have potential? The bulls have potential here as this thing tries to go lower. They get sellers trying to sell that move, and if it breaks, it usually is violent, very, very fast, and it returns back to the beginning of the spike, right? So bears, you're looking to fade that move higher on buyer failure coming back down. Bulls, you want to see first, I want to see the hold that pullback, right? Show me you mean it, bulls, and hold that pullback. If you hold that pullback, now you've got my attention. Now the next step is to run those stops above, and then you're off, right? It's going to go back to those highs. So that's the meat and potatoes of a spiking channel. Now, obviously, an illustration is one thing. Trading it effectively in real time is another, and that's why our trade room here at School of Trade, which, by the way, is open through the end of the year. My last newsletter will be tonight, but we will have our trade room open for all of our members. I'm not going anywhere, so I'll be here working hard with our students. Bottom line right now, though, is here's your spiking channel on the chart. Now you can tell what we're looking good for, right? Now you can tell what the plan is. So first of all, the high of that channel, right, that's where you're going to get the next best selling opportunities. Okay, those are usually going to be decent opportunities, but the best opportunity is going to be, you'll notice here it's got a little bit of an undershoot of that low. So that undershoot says it'll probably overcorrect higher That's exactly where the bears are looking for the buyers trying to buy that pullback. Okay, if they're successful, they'll make a run up to the base of that channel. If they're unsuccessful, though, you know where it's going next, right back down. Okay, so if you're a bear right now, you're selling the highs of that channel. If you're a bear right now, you're selling the failure on that next pullback. Remember, that's the juicy one. That's got the good stuff in it. And then, of course, don't forget, if you're a bull, you really got to be careful right now. Don't confuse the sluggishness of this move lower as a bear, as a bullish market or potential for a failure. What happens is the bears start seeing these, but look, we're still making lower lows. We're still making lower highs. You've got to get some proof before you buy this market. And in my opinion, the proof's going to be, can you hold that pullback, right? If you can hold that pullback, then you've got some targets waiting for you. The real big target's going to be back around that 38 area because that's the base of that channel. And then if we hold that, guys, you know where we're going, back to 39. I doubt it for tomorrow. I doubt 39s are going to be in the cards for tomorrow. But, hey, I mean, don't listen to me. Listen to the chart. The chart will tell you what's going to happen tomorrow. I'll be listening to this chart live in real time tomorrow morning. We open up the trade room at 8 o'clock Eastern time. So now that you're a specialist on the spiking channels, we got one on the euro for tomorrow. We'll talk about that in a moment. Moving on to the S&P 500 here. Now, we do have a rollover alert on the S&P 500. Here's the reality, though. The S&P is, well, it already adjusted here at the Globex session start, but the S&P 500, we're still seeing a lot more volume on the 12-15. We are due for rollover today or tomorrow, but as of today, we still had close to 1 million contracts more being traded on the 12-15 contract. So I'm going to say keep trading the December 2015 contract tomorrow on the S&P. But I would imagine, though, by the end of the day tomorrow, though, you will be ready to roll over to that 316 contract. We may be in one of those environments tomorrow on the S&P where we share volume, where it's kind of half on the December, half on the March 2016 contract. If that's the case, I'll just keep trading the December. I won't start trading the 316 contract, the March 16th contract, until we see volume exceed the December contract. So as always, we teach you guys all this stuff to our students here at School of Trade. So if you don't know how to do rollover, if you need more help, just come out and join us tomorrow. We'll be watching this market live in real time tomorrow morning as well. We also trade the S&P 500 in our chat room as well. It's one of our favorites in the chat room. How are we doing the S&P here? Now the S&P is nearing the tail end of the bear flag, which started at the end of yesterday's session. Now we have 3 legs higher. Now remember what happened when the euro made 3 legs higher, right? It collapsed. We'll talk about that in a moment. Those 3 legs higher into a measured move pushing higher. We also have a very interesting double overshoot. Now double overshoots don't happen very often. Okay, that's usually because of either profit taking or stop running. But in this case, though, you got to look at this as an exhaustion, right? Those double overshoots of the highs there, I see it as being exhaustion. It fits up well with this personality of a bear flag. Now, sellers, let's talk about this. Sellers will be looking for the buyers to fail on this pullback, okay? With a new lower low, then they can start selling retracements. But as of right now, on this pullback right now, these buyers need to hold this. If they can't hold this pullback, it's likely to go into collapse, targeting that low back at 2034 and a quarter, 2034 half. Okay, remember that's the flag we talked about last night. And you might be looking at this going, is this the same thing as a spike in channel? No, remember this is a flag. This is kind of the opposite. It's kind of the twin sister, but it's not really a twin, right? It's kind of the opposite. It's a spike down, usually off news. But then this is a much more difficult environment, is trading these spike and this flag pattern, because what you've got to do is you've got to catch them failing on that pullback, right? That's the least reliable. The most reliable trade on a flag, which we talked about last night, is as that price goes higher, right? You're waiting for that pullback to fail and hold, right, and sell into those stops, right? Targets on the way down. So we just got that rocket higher. Remember, like I said, we got that rocket higher. So there's that push higher. But you'll notice, though, I mean, literally, there hasn't been a pullback. I mean, the pullback's here, but there hasn't been a reaction to it. So we're expecting the buyers to react. If they fail, that's going to be that trade down to the downside that we were talking about in last night's newsletter. So sellers, you guys are looking for the buyers to fail on this pullback. If we start making new lower lows now, then you can start selling retracements. But the only way you start selling retracements of wave patterns and continuation patterns is if these buyers can't hold this pullback, right? You're definitely do not try to sell this retracement right here. Okay, that is not a trade you want to take. It's a very low probability trade right now because all they're going to do is just drop this a little bit lower, stop you out, and send it right back up again. So just be careful. Don't sell this retracement. Sell into this buyer failing. It's a very different environment when you sell into failure because you get the benefit of kicking people out via their stops, right? They're helping your position when you sell into failures. Now, buyers. Let's talk about buyers. Buyers may have a chance at this tomorrow, but they need to see this price push higher and then again hold that pullback. That's the key. If you're a seller right now, you're hoping this price goes higher and the buyers can't hold the pullback, right? That's going to be your best chance to sell. Remember, this looks like a bullish market. And I don't want to sound like it can't be a bullish market, right? I can't predict the future. All I know is this is a flag. And under typical flag situation, it's going to confuse the hell out of you, which means, like I said last night in the newsletter, remember, it helps to watch every night because I build on lessons that we talked about last night. So again, if you're a buyer, it's quite simple. I want to see it hold that pullback and go higher. Look, we haven't held any pullbacks yet. It kind of bleeds through it and then goes up. Right now, what it feels like is it feels like you got some accumulating sellers selling into this move. That's what it feels like. It feels like you've got a lot of retail traders who are buying pullbacks, but you look at the strength of these sell candles up top here, and it feels like you've got some accumulation selling into these highs for a big old drop right back down. Remember, if you're a big money manager, you're using the S&P 500 as a hedge right now, and every time it goes up, you're selling it back down. You've got to scale into this if you get a big position to get filled. That's exactly what it feels like right now. Now, again, feelings have nothing to do with this. I'm not trading value. I'm not trading fundamentals. I'm trading short-term impulse reactions, fear and greed. So, scenario one, we pop up, we hold the pullback. Now we know. I'll give a lot more attention to the bull side, and we're gunning for 70s. We're gunning for 79.5, right? All of our resistance areas overhead if we hold that pullback. Okay? We go higher and we don't hold that pullback. That's exactly what I anticipate. Again, I have to wait patiently to see what happens, just like you do. If we fail on that pullback, then we know, right? We're selling into those stops, targets, and targets all the way down, and it should go pretty fast from there because it looks like all the big money's already in this move right now. Okay, if it goes lower, right? If it goes lower, then as soon as we start making those lower lows, then we can start analyzing for pullbacks, right, and selling on the way down. Again, now you get a plan there for the S&P. And watch the rollover for tomorrow. So again, I said this last night. I'll say it again tonight. This is one of the hardest markets you got right now because of the flag. And flags are always going to be a little bit tricky. I talked about it last night in great detail. Go back and watch last night's lesson on flags, and you'll definitely see more information there. Let's keep moving. Got a plan for the crude? Got a plan for the S&P? Oh man, get the kids out of the room for this one. This gold chart wins the ugly chart of the evening. What the heck is going on here right now? Did everybody leave the building? It's not. I mean, literally. I don't know if I can make my chart time frame any faster than 2,500 volume right now. Now, here's the deal. Gold last night, I told you, last night was all about flags. Here was a good example. Remember we said this last night? We had the perfect example of flag. A, B, C, D up, right? They can't hold the pullback. Down you go. Prime example. Picture perfect example. If it wasn't going to be a bunch of black ink, I would say print this out and put it on the fridge, right? Save the ink. Save the ink. Put it on your iPad. The bottom line, though, is this is an example of a bear flag, right? It's a spike down on news. Nice, kind of well-behaved channel, right? Confuses the hell out of the buyers. The buyers try to buy the pullback. Once you start seeing those buyers fail, you know where this is going. It's going right back to the downside. But wait a second. What the heck is this? They go one tick from the low? One tick. Yeah, that's a one tick miss. Now, a one tick miss tells me one of two things. Either one, they haven't finished the job yet, and they're going to come back to bury it in the backyard. Or two, that's complete rejection by the buyers, and now we're destined to launch higher. Again, I don't know where we're going tomorrow. All I know is we're making our way in a bear flag. So I have to be aware of that, right? That little pathetic with a capital P is a big, big clue. Now, I also look left. And when I look left, I see this just, right? Look at the size of these wicks. Okay, now I'm not a supply and demand trader like we see all the noobs out there these days, loving those indicators. Okay, I do understand there may be some value in that, but it's highly, highly unreliable. But here's an example where we take the low of that wick, right? We run it all the way up to the bodies, and we have this trap zone, right? A ton of what I would assume to be a bear trap like no other. So let's play the game. What if price goes higher? What if price goes lower? First of all, I have to give the benefit of the doubt to the bears, right? I've got to give the benefit of the doubt to the bears right now. Okay, we have absolutely no reason to think this is a bullish market yet. What I do have reason to believe, though, is that if we go lower, it's going to be account suicide to sell into that low. Just the way we saw the reaction today. And looking left, again, those big wicks at the bottom of those red and green candles. So that tells me right away the last thing I want to do tomorrow, if price goes lower, is sell into that low. Remember that old saying, right? Buy low, sell high? Yeah. That's still true, by the way. So I don't want to sell low. So if we go lower tomorrow, you got to be careful getting short down here. What I would rather do is let every other poor sucker get trapped out, right? Because it'll probably bounce pretty hard. And then look for the buyers to buy it, and you guessed it, if they fail, that's your way that you sell. Let them get into this area first. Okay? You don't need to be the person selling into this area. Let some other poor sucker do that. I'm almost guaranteeing you, though, you're going to see a nice strong buy there. It's going to bounce. Now, I'm not recommending you buy it. I'm recommending you sell this market when it fails on that pullback. Okay, that's the only way you're going to safely be able to sell into that low as it goes down and finishes this flag pattern, right, down to 1061, right, 1061.3. So be aware of that. Okay, now the easy money is if it goes higher. If it goes higher and we hold a pullback, now my suspicions, remember that clue I talked about, right? If we go higher and we hold a pullback, now you've got a potential failed flag, which means you're going back to the flag high, and more importantly, you're going back to the flag pole up at 85 even. It's very similar to a spike in channel. If they fail, it'll run all the way back to where it came from, to where the spike down started. And again, if they hold the pullback, now the clues start adding up, and we can look to be a buyer. If they don't hold the pullback, this is where you want to sell. This is the best selling opportunity tomorrow. They jump higher. They can't hold the pullback. Now you've got all that space wide open as it goes down into that trap zone. Okay? So the only real rule is don't sell the darn trap zone. That's why I called it a trap zone, right? I didn't call it the sell zone, right? It's green for crying out loud. That should give you enough information, right? Okay, so now you get a good plan there for gold. Again, the best scenario is it goes higher. And then from there, if it holds the pullback, you're a buyer, right? If it can't hold the pullback, right, sellers, now you've got a nice juicy opportunity here to finish off, right, that bear flag down to that 1062 area. All right, guys, wrapping up here on the euro, and like I said, here's another spike in channel. Now, The euro is due for rollover at the tomorrow, I believe. Yeah. Yeah, so the euro's not due for rollover tomorrow. So most likely at the end of the day tomorrow, you'll be moving from the 12.15 on the euro to the 3.16. So be aware of that. Okay? Euro is bearish after collapsing off yesterday's highs. We have a bearish spike in channel to give us plenty of trading opportunities in both directions, right? We already did a lesson on that, and now you're an expert on a spike in channel. Now, yesterday's 3 pushes higher, if I may say so myself, right, told us to sell off those highs, right? And that's exactly what happened. Remember this from yesterday's newsletter? 1, 2, 3. Remember this? It was the market makers, the trend followers, and the late adopters, right? And then, of course, fail once, fail twice, and just whoo! It literally looks like the buyers just left the building. Now, more importantly, though, look how far it went. It went below that last low. Now, if I'm a long-term buyer, I've probably got my stop losses hanging out down here, right? So I want you to put yourself in the shoes of a long-term buyer on this euro. What's your position right now if you're a buyer on the euro? You're flat. What's going to happen if price goes higher again? You're going to wish you were back in, huh? And you're probably going to look for a pullback to do it. So what does that tell me? This could either be a complete failure, right? Here's scenario 1. Scenario 1 is we fail and we return all the way back to that 0880. But in all reality, what's a little more likely, at least from my point of view, is that we just cleared the deck. We just ran out all those buyers that were holding overnight. Now they got to get back in. And if they get back in, you know where it's going, right? The base of the channel and the spike back up. Okay, so those are the 2 scenarios. Scenario 1, this is one big failure and we go all the way back down to the low. Or 2, which I kind of have a gut feeling for, and again, my gut's not a trading strategy, so do not use that as your trading strategy. I'm going to wait and see proof tomorrow like you should as well. But again, I put myself in the buyer's shoes. If I didn't take profit up here, I was forced out of the market when it ran my stop. If it goes higher again and I see that pullback hold, I'm now aggressively trying to find a way back in, right? Because I can get back in now at the same price again before. So it's going to be a pretty lucrative opportunity to be a buyer tomorrow if we see proof. If we see proof. Okay, so now into the scenario, and again, you're a specialist now at a spike in channel. What are you going to do? What if price goes lower, right? So there's your spike down, there's your channel down. Let's play that game. What if price goes higher? What if price goes lower? If price goes lower, you do nothing, right? Nothing. You don't sell the lows, you buy the lows. But the problem is you don't want to be a buyer if price goes lower, okay? If price goes lower, there are no reliable trade setups. In my opinion, we're going to rotate higher, right? See the channel? We go, remember channel rotation? Low to high, high to low, tag you're it. It's probably going to go back to the highs, okay? And when it goes back to the highs, that's where sellers come in. So once again, if it goes lower, you do nothing, okay? You don't buy it, you don't sell it. You can't buy it, it's a bearish market right now. You can't sell it because then you're going against that cardinal rule. You don't sell low, right? You buy low. So do nothing if it goes lower. Very similar to gold, it needs to go higher for the most reliable trade. I'd be looking for an ABCD correction back higher. And then again, on the pullback, this is where the variable, this is where the magic happens. If we hold the pullback, I would assume every buyer and their sister are going to look at this as a chance to get back in at a pretty good price. Okay? If it doesn't hold, that's where the best opportunities are going to be a seller as it comes crashing back down, right, to that range low. Okay? Now remember, if it goes crashing back down, take some profit at the targets listed below, 0925, 0917, try to hold a portion of that tasty sell trade down to 0880. All right, guys? And don't forget, at the end of the day on Friday, go ahead and roll over to the 316. I'm pretty sure you'll be looking at rollover end of the day tomorrow. All right, guys? You got to plan for the euro. The euro is nice and easy, right? Like that. Gold, gives me that gag reflex. Look at this chart right now. Pretty ugly on gold. Again, on gold, the only real option right now is it's got to go higher, so we can sell it or we'll look for the buy in that pullback. On the S&P, again, my gut tells me the S&P, they're just selling into the highs right now and they're accumulating as it goes higher, just the way it feels right now. But again, you know the plan. If they can hold this pullback, this next pullback, they can hold it, you're bullish going to 70s, right? If they can't hold it, you're bearish going down to 2035. And then, of course, last chart of 2015, we got our crude member channel rotation, right? High to low, low to high, high to low, low to high, high to low. Don't do nothing down around those lows, right? Wait for it to come up. If they hold the pullback, consider being a buyer. Not with my account. I'm looking for them to fail, right, and come back down. You get the plan now for both sides on the crude. Remember on crude too, don't confuse this market. This market can easily go higher up to that 37.87 to 37.50 area. Remember this little zone right there, right? So don't be surprised if it jumps up here overnight, pullback can't hold, back down, or pullback holds, and now they're going to go gunning for 39 here in tomorrow's session. We'll have to wait and see what happens. I'm going to be waiting like everybody else. Last newsletter of 2015. Thank you guys, by the way. Thank you for being such a great group. I get so many amazing feedback emails and comments on my YouTube channel, on my blog. I'll tell you guys that you guys give just as much to me every day that I give to you, and I think that's the best part about my nightly newsletter. I've been doing this newsletter for almost a decade now. It's crazy how time flies. Now, as I leave you guys for 2015, I encourage you to do one thing. Don't work too hard over this holiday. You only get about 70 of these, right? And when you're young, you don't appreciate them. So take advantage of the time off this year. Over the next week, I'll be finishing up the brand new School of Trade 3.0 release. One of the most exciting updates we've ever made to School of Trade's website, right, in our course materials. I'm putting together some very exciting things for next year, and then, of course, I'll be off on break as well. So this might be my last newsletter of the year, but I'll still be working hard with our students up until December 31st. I appreciate everyone's support. I appreciate you sharing this information with a friend. I appreciate every single one of you guys that watch every night. And that's what I'll be thankful for as I go into this holiday season. Okay, don't forget, you can still learn more with my free trial than anywhere else on the interwebs. Grab a copy of the free trial. I look forward to seeing you, our Trader, as a brand new member. And remember, guys, you can get more information about our beginner, intermediate, and advanced levels of membership by going right to our website. And we always have someone standing by 24/7, 365. I wish you all a very happy Hanukkah, a very Merry Christmas, a Festivus for the rest of us. For all you Seinfeld fans out there, you can't forget about Festivus, right? You get your poll out. I'll be doing my feats of strength tomorrow with John Henry. The bottom line is, though, have a very happy holiday season. Have a safe New Year. Make sure you come back with all your fingers and toes, right? Next newsletter is January 4th, 2016. You know how we roll. I'll see you next time, guys. Adios, amigos. Be nice to each other out there, will ya? It's the holiday season. It's a holiday season, right? We'll see you guys next time. Adios, amigos. Bye-bye for now.